People, welcome to another YouTube video. AHFX, Alex Hill FX, aka Posh Spice, aka whatever you want to refer to me as, that's absolutely fine. I'll pretty much say no offense. This video is specifically requested from one of my students to help him grasp zone-to-zone trading a little bit better. I'm going to be covering basically like a brainstorm, a mind map, whatever you guys used to do at school. I'm basically just going to come and annotate a diagram and basically give you my take on how I trade zone to zone, what I'm looking for, what I'm not looking for, what I'm looking to avoid, how to prevent fake outs, how to basically take your premium entries, and all that kind of jazz really. So I'm going to start off. I'm basically just going to put text boxes around this box, and it's going to be interactive. I'm going to potentially get some charts up as well, show you a few successful zone-to-zone trades, and hopefully you can take something away from this, because I know a lot of people, when they do understand trading zone-to-zone, they make a lot more pips than you'd ever make on any other setup, in my opinion. So let's get into it. Number one, what am I looking for first? So the first thing that I'm looking for when I'm trading zone to zone, so we'll go over here. I'm drawing my zones on 1 hour time frame. You can use 4 hour as well. So one hour stroke 4 hour. Essentially use wicks of the candles as your guide. Wicks are made when the price taps a point and retraces. Retraces, pulls back, can be whatever word you want to use. Essentially, that's how a wick is created, because it taps a price and rejects. Could be a wick above the candle, could be a wick below the candle. Essentially, you just want to draw your sup and res, so support, sup and res, support and resistance on 1 hour and 4 hour, and basically draw a box just pretty much like this across wicks of candles. So it might be orange, for example, whatever color that is, and it might look like this. There's a wick in there, and there might be another one over here. And essentially, this is what you would say would potentially be your resistance, or if the wicks were the other side, you'd say it was your support. That's how you draw it. So using the wicks as your guideline, where the price has tapped and pulled away harsh, because you know for a fact, well, not for a fact, but you know 80% of the time when we tap certain price levels, we're going to retrace and push away. Hence why we sell resistance, buy at support, etc., etc. I'm not going to get into that too much, but that is part of trading zone to zone. So step number one, use the wicks of the candle as a guideline and draw it on 1 hour, 4 hour time frame. So let me just delete this. Okay, next up, we'll go up here next. Next up, I'm going to basically say my biggest thing I'm looking for is if it is in the middle. So if price is in the middle of the zone, so essentially we've got maybe, I don't know, a zone of price here, and then we've got a zone of price, let's just pretend they're of equal size, and we've got a zone of price here, and the price is here, so in the middle. Don't trade. So how to avoid, don't trade, because essentially you don't know whether it's going to go up to the top zone or the bottom zone. It's essentially ranging. Might consolidate, spell, and essentially you don't want to trade if it's in the middle of a zone, because you don't understand where the price is going to go. You just want to be reactive. You don't want to try and call or guess it. Just be reactive to it. So that's tip number two. Tip number three, and this is how you basically take entries on zone to zone. So it's entries 101. So if it rejects, for example, like this. So if, like I said, I should probably leave this up actually. So if it rejects, so if this is, say this is a 15-minute candle, so it's made up of 3 times 5-minute candles, sorry. If it's at this point here, if you reject on like 1 hour, generally my sell would be sort of in the middle of that wick, because I would have anticipated that because we're at resistance or because we're at support, we're probably going to push up for liquidity or down for liquidity before we can break above the zone to go to the next one. If the zone holds, then the likelihood is it could go back down to the next one. So we might have this zone down here, which might be, I don't know, 20, 30 pips. And because we couldn't break above the top one there, we're essentially probably going to come back down and revisit this. So failure to break above a zone, you could potentially revisit the last one that you've just basically come from, because price would have gone from this to this most likely. Another way to take entries, so if you want to wait for the break basically. So let me make this box a little bit bigger. So wait for the break of the zone. Like I say, it can be support resistance. It can be either one. And you basically you might have like an accumulation of orders as well. So keep an eye out for that. So that's while that's on my mind. So accumulation of orders. I'll come back to that, but I just wanted to make sure I've got that down. That's the little bullet point over there. Essentially, to take entries, you want price to basically break resistance. So say we come up to resistance. Say we get a candle and it goes through. So you might have, I took this setup on GBP JPY on Friday. So I'm not sure whether people saw that on my Insta. If you didn't, at AlexHillFX, go and look at it. Explain it nicer than I'm explaining it right now. Essentially, say this is like a resistance scenario. So you tap resistance, you break through, you retest, and then you'll probably push up. So your entry really, and then you'll just start pushing up. So that might be there. And so your entry really is going to be this point right here where the cursor is. Your entry is going to be the retest. So entries, enter on the retest of the broken zone. Because, so if it's resistance, turn support. So it will turn support, and if it holds, then it's probably going to essentially be resistance turn support. So you would probably take buys, and your target generally would be the next zone up, which could be, I don't know, 20, 30 pips. Depends what pair it is, depends how quick it moves. If it's GJ, then it's more likely going to be more pips than UJ or USD CAD or USD Swiss franc or Aussie dollar US dollar. It can be any pair. This works on any pair. It's just understanding price action. But essentially, TP would be the next zone of price. So wherever that might be, go back to this point to work out where your next zone of price is going to be. Look to your left. Always make sure you're looking to your left and extend. So this is another tip. So extend the zones to the right. This is like fundamental, because essentially past price action repeats itself so often that if we can extend the zones of price that we're drawing to the right hand side, we know where price is going to struggle next time. It's essentially like drawing support and resistance. Just every morning I generally update these 1 hourly, like I say, or 4 hourly, extend them to the right, and often you don't have to update them too much because past price usually repeats itself, like I just said. How will you know if you should trade the zone to zone? So you need to make sure you look at the news as well. If news is coming out and it just taps a zone, I'd probably stay. I'm generally staying away. Like for me, news depends what it is. If it's low impact, then it won't have much of a difference. But if it's something like NFP, zone to zone on NFP is not gospel. So don't they get too like caught up and hung up in the whole. Oh, it's zone to zone. It's got to be zone to zone. Certain times there'll be different kind of reasons why it won't happen. Or if price literally just taps the zone and pulls away, like, so then it's essentially it hasn't broken. So let me just run into the accumulation of orders. So what does this mean? So let me just let me delete that part so I can do some drawings over here. So let's say this is your zone of resistance. We'll call it resistance. We'll say resistance, and price is pushing up to it, and it pushes up, and we tap. So look, let's just say we tap, but then the next candle's the same, and we literally just tap, and we tap, and we tap, and we tap, and we tap. So yes, as I was saying, sorry I had to pause the recording because there was absolutely ridiculous noises coming from outside, and I know they would have picked up on the video. So let me just pick up where I left off. So we're talking about accumulation of orders, and essentially say the price is at resistance, and these arrows are essentially going to be like candles, and you see them all forming, but they're failing to close above resistance. They're like penetrating and tapping into it, but there's no close above or close inside. Essentially, this is like what's a lot of people call like an order block or accumulation of orders, where there's a lot of orders and there's a lot of pressure, but it's like a fight between the buyers and sellers, and essentially it's just consolidating at resistance. Eventually it is going to break out because there's that volume, the accumulation of the buying orders, for example, because it's buy orders that will break resistance, and it could be completely vice versa for support, etc. So keep that in mind, that it is going to break out. So maybe could use pending orders, but you see there's that large volume and the accumulation of orders, and that gives you some kind of clue, or like makes your judgment easier to say, yes, we're probably going to break resistance at this point soon. Because what do we know about consolidation? Essentially, consolidation means breakouts, and essentially it means someone's in control, the buyers or the sellers are in control, and that's how you know when potentially resistance or support is going to break. You don't want to try and be the hero and call when it's going to break. That's why I quite like pending orders, or you just catch the retest. So say we break through resistance, we're going to probably come down, retest where my cursor is, then price is probably going to continue moving up. Because what do we know? We know the market moves in waves, and what do I mean by waves? If you guys haven't watched any of my videos before, the market can't just move in one direction. So market moves up, and then market will move back down a little bit for liquidity. This might be like a 4-hour pullback or like a 1-hour pullback maybe. I don't know. Depends what you see on your chart, depends what day it is, depends what pair it is. But like I say, market moves in waves. So essentially, if you miss the initial breakout of the zone, don't worry, it's going to come back and retest. If it doesn't, no harm done, because you want to make sure that you're taking the best and most high probability setups that there is. And so zone to zone could be like this, for example. Let me just jump. As you can see on screen, here is an example of the perfect kind of zone to zone. And also what I traded today, as you can see, I took actually sells at this point here on the chart. So I took sells at about 150.061, I think it was. And I had another entry at 0.26. And essentially I sold it back at the sort of 1 hour zone of resistance. So you can look left, multiple taps, pushes, taps, pushes. And that's obviously why I've got that zone drawn up. And you can see I've got the lower zone drawn up as well. So I took sells back to the EMA. So I didn't get as many pips as I could have in this situation. But at the time it was, I think it was New York Stock Exchange was about to open. So I sort of secured the bag. And then after that, I just close the charts, and that's generally what I do. But then I suppose it could have been a zone to zone, but in my eyes I thought we had bullish momentum, so I thought we'd probably fill that 1 hour wick afterwards. And it was the start of a new 4-hour candle because of the New York Stock Exchange. So I assumed this candle here was going to be like a liquidity down to pull back up to go to the top zone up there, maintaining overall bullish market structure as well. I didn't actually see that kind of zone to zone drop happening. But yeah, if I was on the ball, I could have had a position open. But you know, you live and learn, don't you? However, right now, what I'm looking for, maybe not because of the timing, because it's obviously 5 minutes past 5, but I'm actually thinking that we should probably break this zone, retest, and then probably down to the next zone, or down to the EMA, 200 EMA as a target. Obviously, that may happen, it may not happen. Now's not my trading session because London's closed over an hour ago, so I shouldn't be trading, so I'm going to be closing my laptop very shortly. Hopefully this video has been helpful, and hopefully you find this example helpful, and make sure that you like, comment and subscribe if you don't already, and tell a friend to tell their friends about the video. That's it from me, people, and peace out.